The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome back. Welcome, folks. Tommy O'Brien, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, we got the Dow up 10, the NASDAQ is up 7, S&Ps are up 2, gold is down $4.90. You got the silver down 10 cents. Bonds, the 10 years up 1 tick, 126. The 30 is up 11 at 155, and King Dollar is going to the moon. It's up 505 ticks. Going to Thanksgiving, it's at that 100 level, 100.09 right now. The euro is down 57 at 105. And if you are driving, folks, please be safe. We wish you a great Thanksgiving. It's going to no doubt be a slow day today, half a day, Friday.
Yeah. My drive was pretty easy coming in. It seems like today.
The parking lot's empty.
The parking lot's empty. Now, I wonder when the travel traffic's going to start, right? There's no work traffic.
Right.
But I bet that it's already starting. If you had the day off or something, you were traveling, and I would want to be out of there ASAP, like right now, because it's going to start probably sooner rather than later.
Right. There's no doubt. We take a look at the European markets. The European markets are up big, man.
1 to 2%, right? Yeah,
it's pretty amazing, the resilience in the markets in general. But the Paris is up 1.5%. The DAX is up 2. The FTSE is up 0.8%. Now we're not following them, but I suspect yesterday how we came back. We came back pretty good.
That was strength for sure.
Yeah. The minuses still are out here, man, and it's really wild. A stock that was, you talk about moving around. What you had is that last night, BioMarin, thank you. The FDA basically didn't like what there was one of their drugs, and they stopped the stock. Right now, folks, it's only down $1.90. It was down like $15.
Okay, and that's so it's down 2%.
Yeah,
$2, 2%. It's like $100 stock.
Right,
yeah,
right. The mover down today is Hewlett Packard, 14%.
Yeah,
down $2.10. Now they split that, and it's always intriguing, man, that aftermarket, before market, and then what ends up happening. Because last night, when Hewlett Packard came out, they were down about, let me see, I think it's a $14 stock. Let me pull this up for a second. HBQ.
You had it up there already?
Oh, thanks. I had it from last night. That's what happened. We were talking about it last night. So when it came out last night, it was only down like about 40 cents. Yeah, this is the same thing. This is the same stock. So it's down like 40 cents. And then they're taking it south today. That's a gap down right against, I'm not sure whether there's any strength there, but HPQ. So you're down. That's a big move for a $10 stock. And you get some, so if we bring this back, what you're going to see, this wants to go after. It looks like the April.
Well, it was a $15 stock. It's a $12.50 stock now.
Yeah, right. So that's September. There it is right there. So it wants to go after, it's 12.56. That low there is 12.08. No, 11.28. That's what it looks like it wants to take on.
It's interesting just thinking about it, of all the dynamics that come into, and politics jump into my head, but Carly Fiorina with Hewlett Packard. And of course, this has nothing to do with her at all, but I just wonder how there's a million variables that these candidates across the board have to deal with, and I wonder whether it's just so subtly or something, she's going to have to deal with a question. And she has nothing to do with it at this point, but still, it just popped into my head, you hear the tie, it's just amusing. I always feel bad, that wouldn't be fair at all. I'm just saying how that could come into it.
Well,
it's like, there's just a million things that can come into politics, and I'm sure she doesn't enjoy seeing Hewlett Packard down big this morning.
Well, if you only took the stock price, she can't claim that
Right. No, it's
anything
up to
was
you.
happening.
I'm just saying that it's it's
no,
amusing.
listen,
that,
I'm with you.
As they come down, there's a million things that affect all the candidates, and even for
it has to do with the timing.
Right. That's what I'm saying. Right. Exactly.
There's no doubt. I mean, think about, even when you go back. I mean, you think about the Clinton era, and even. That was the baby boomers. That's just where the cycle was just great. I mean, right?
No,
I mean,
for sure. Right, and that's what I'm saying. There's a million external factors that they can't control.
You get in the right cycle, man, and you're a hero.
Right, exactly.
It's just like I said.
And I'd be saying the same thing if they destroyed earnings and they popped.
Yeah.
You know that would have been her reply. Either one would have been unfair because it didn't matter. But guess what? They would have mattered somehow, and that's.
It always matters if you win.
I think it matters across the board if you lose too.
Yeah, no, it does. It does. No, it would. There's no doubt about that. Gold out here needs a bid. We're at 1069. The cool thing here is that with the dollar, folks, so dramatically higher, and they are not taking the commodities out to the woodshed, that is, pretty intense.
Yes.
So we'll see if, in fact, this is where we get a turn or not, because we've been talking about this. If this dollar, okay, now this is, I can visualize it technically. I cannot visualize this. Now, this is really cool how I cannot visualize this and perceive it in my head fundamentally, and this is what it is. So if we take the dollar back and we see where it is right now. So the dollar in 2002 was trading, the dollar index this is, okay?
Yes.
Was trading at 120.80, and that's a very strong dollar, right? And that's when I started the gold report because I felt the dollar was going to go down, right? Well, the dollar went from 120 and ended up going to 70 in 2008.
Yes.
Now, as you've been building cars on the way back up, if in fact that dollar takes out the high, we've been at kind of the same place. That's a monthly chart. So we've been on the...
You're talking about the highs from March?
Yes. Yeah, so the March. So we've been at the same place from...
So what's the high? 100.380?
Yeah. And
that's the high.
And so we're looking at a continuous contract now, folks. And so we're at 100. We've hit 100.23, which is what? That's only 10 100ths.
15 100ths.
15 100ths, okay.
So 38.
So if we take that out with conviction, that dollar can get up to doesn't have to go to the high, but if we bring it, right at that high, what's that? That's 109. That's a monster move, man.
That is a monster move.
So looking at that, I'm saying, okay, if in fact that happens, what would that happen to earnings? Now this is pretty cool because the correlation, I remember in the 80s we had a wicked strong dollar, okay? And all the companies did great. There was no problem. And I started thinking about this last night. Now, and I don't know the facts would be that our S&P companies then, okay, were not as reliant on all world business.
I totally agree. That's what I was going to say.
Versus now.
Right,
for
sure.
So it's going to be really...
In the 80s, your company probably lived and died off of the American consumer.
Yeah. Right.
You weren't living or dying off of the Chinese consumer in the 80s. The Mexican, the Europe. Yeah, I mean...
our companies not like international.
Not like you are now. It's not even close.
Yeah.
I completely agree. It would be a different game entirely.
So, it's going to be wild. And
most companies, their growth is coming right now not from America,
Yeah, right.
Talk about Apple...
Yeah, no, we can bring that up too and watch because this is so cool when you can do this. I like how. Let's see, can I do that? Let's see, where is it?
There you go, right there.
There it is. Okay, so watch. This is pretty cool, man. So, in America, Apple plans to grow 9.7% in 3 years. The 3-year growth. This is just averages, all right. Asia, look at Asia, 27.9%.
Right.
Europe 8.5% and Japan 12.9.
And you can see that, so that's 2015 revenue.
Yep.
So they had $233 billion for the entire year, and only $93 billion of that's in the Americas.
Yeah, it's pretty intense.
That's $140 billion for the year that they're taking anywhere outside of America. So that's...
And look at iPhones, 25%.
Yeah.
Macintosh is 3%, iPads 9%.
Just so that's growth, 25%, right? That's not there. Just so as you...
Oh yeah, it is. Yeah. Well, I guess hold it.
Yeah, it's a lot more. It's 155 billion. So
oh my God, that's even crazier. So it's all iPhone. 50,
60, 70% of it.
50, 60. Yeah. Well, yeah.
70%.
Wow, that's intense. That is intense, no doubt. So one of the targets want us to look at Glencore and London. Okay, so let me pull this up. UKX first. Let me find this. So there's Glencore, G-L-E-N-L-N. Okay, G-L-E-N-L-N. Now Glencore. Okay, so Glencore is trading at 90.20. I believe this is pence. I would let this. The question is it bottomed yet? I would let it hit the 66.67. The reason being is that in September, the high of September was 97.35. The low is 66.67, and until it gets over this 97.35, bottom line is that I wouldn't be touching it because it certainly hasn't shown any strength. In fact, right there on the 12th of November, it showed that you still have sellers in the equity. What is interesting out here, and we're going to have Sal Gilberti on, the president of Tucrium Funds.
At 10:30. He's coming up on the show.
At 10:30 today. And when we talk commodities, the nickel this morning is up 5.66%. Now, what happens if you go over to Valley, right? And I've been watching this like, okay, man, and this is the same thing about, is Valley bottomed? And I wouldn't buy this to actually it has to get, this is kind of the same thing. It has to get over 404, I believe. But nickel itself is a big component inside the stainless steel market. And Valley, of course, you need iron in order to make stainless steel. Tommy O'Brien, you stay right there, folks. We'll come right back. Dow Industrials are up 22, Nasdaq's up 14, S&Ps are up 3.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 16, Nasdaq's up 13, S&Ps are up 3. We have gold down 5. King Dollar is going to be the number out here today, and I guess the number inside the, I heard a statistic this morning on CNBC, a guy from ComScore, which I guess they rate retailers, and that Amazon on a continual basis has 20% of the online shopping business now.
Okay.
20%.
I believe it. I probably do over 20% of my online shopping on Amazon. That's probably putting it lightly. I bet if you add up everything, I'm across 50%.
Yeah.
I could be at 80. Right. It is. Yeah.
Yeah, it's just using someone else.
Right.
That's intense, man.
It is. And we were talking about, I was telling you this past weekend, I watched a video. Remember that they have these buttons now you push when you run out of things?
Right.
So they're selling buttons that are $4.99 on Amazon.
Okay.
And you basically program it so that, for instance, paper towels. You'll put this little button that's synced to Wi-Fi, and you put it right next to your paper towels. So when you run out of paper towels, you just push the button, and it sends something to your email that says you ran out of paper towels. So it gives you like a confirm, as in if you hit it by accident, it's not just going to start ordering them.
Right.
But you can see how they're building for the future in terms of literally outlining your house with a button when you run out of things, that you push the button, and next day, probably next hour, that says they combine all these things, it's at your door from the push of a button.
So check this out.
In your bathroom, you have toilet paper, you have everything. Totally. Buttons everywhere, and it's a cool technology.
It's huge because the same...
Jetsons, right? The little Jetsons? Yeah,
totally. And the same guy that was talking about this, right? They were asking him about the what is audited on your computer versus your cell phone.
Okay.
And the stat there is that if you have to do more research and it's a bigger item, you're going to be ordering still on your computer.
Desktop,
right?
Yes.
On the desktop. That being said, what he was saying is that they're making it so much easier, though, and that's where this comes in.
For your phone?
Yeah, getting orders.
Amazon in particular?
No.
Okay, because I agree with the Amazon. I actually
just in general
do purchase things using the Amazon app.
Oh, I do in a second.
Yeah,
No, I can
very
see
simple.
that.
I bought something last night using the Amazon app.
Yeah. Particularly
last night. It's like every day I come in. I bought some more stuff on Amazon, but it is.
Well,
$20 here, $25 there. Every time I just need something that's cheap, free delivery.
Paper towels, toilet paper, stuff that you use that can be in the garages. I think awesome. Do you know what I mean?
Yeah. As long as you're getting a great deal or whatever it is, right?
Right. And those go on sale a lot.
Yes. No. And you can always price check everything online, which is the coolest part.
Yeah, that is.
Camel.
Camel.
3 of them.
Unreal.
Yeah. Now, what I saw, another article, I think it was just yesterday, is that Amazon's thinking about doing their own shipping and cutting the middleman out there. And right away I said, of course, why would they? They're talking about getting middled for a huge portion of their revenue and expenses, right? And you know that Amazon likes to do big things and control their chain up and down and control the world. So why would they be relying on a shipping company when they want to ship everything to everybody? It seems like they're made to, run that themselves. Yeah.
Watch they'll go buy Uber.
Right? No, exactly. Something like that, where they shouldn't be getting middled by a shipping company when they literally are the shipping company.
They're the business.
Exactly.
They're the business.
They're the business.
Yeah. That's wild, man.
Yeah. Maybe they'll buy FedEx. Yeah, I mean, seriously, right?
Let's look at that chart, because what does happen...
I don't know what, but yeah, I mean, they're definitely... There's no reason why they're...
Listen, man,
Yeah.
there's no doubt. You know,
I saw the headline.
the
I was
numbers
like, yeah,
didn't
what
go
are they
up.
doing still paying UPS?
The numbers in FedEx and UPS are not as big as folks thought they were. Yeah, see,
and I bet investors must be thinking that.
Yeah,
I mean, it's,
because
no matter what revenue they're taking in, right? That's got to be at risk in terms of, if you drill down the numbers, I wonder what the percentage of revenue that gets driven by Amazon alone. And maybe not FedEx as much, but I think UPS is a big...
Well, you can see, I would say that, watch, we'll put, let's see, I'll compare, let's see, how do I do this? 1 second. There it is. I'll compare, we'll do both securities. Oh, that's the S&P. No, okay. FedEx, let's put UPS. Because I think what we're going to see here, which is going to be a mind blower, is that they probably both have been going up. Oh, yeah, it's not. Look at FedEx.
Close,
FedEx
though.
is stronger. But what you have, you know what my point is here? Is that picture,
Maybe that's because UPS does rely on them more. How did you rate your guts?
So watch, if we go back to 2013, let's go back further. We'll go back 5 years. Okay, so like the market, okay, bottom line, everything's up. But they $77 up to 209, let's say FedEx, and UPS was up to the green line 149. But maybe by that point, that's when Amazon really start saying, okay, I got to start thinking about how we can start delivering.
Sure.
And
that would make sense. That's about a year ago.
Yeah, and if you think that we know that the online business is getting bigger, well, why aren't they, and they're delivering more, but why aren't they getting more business?
Yeah.
Yeah. Wow.
Yep.
You stay right there, folks. Tommy and I are coming right back. Dow right now is up 12, Nasdaq's up 9, S&Ps are up 2.
We got Sal Gilberti coming back after this break.
That's a beautiful thing. Cool. Welcome back, folks. We have the Dow up 37, Nasdaq up 15, S&P's up 5, and we have our man, Mr. Sal Gilberti. Sal, folks, is the president of Tukrium Funds. Now, of course, Tukrium Funds, when we talk about the commodity business, when we're talking about what we're eating, we're talking about corn, soybeans, wheat, sugar. You can put them all together. Bottom line is that you can trade these on the NYSE in the ETF structures. Corn is C-O-R-N. Soybeans is S-O-Y-B. You got wheat, W-E-A-T. Sugarcane, C-A-N-E. And if you'd like to put them all together, T-A-G-S. Sal Gilberti, welcome back to TFNN. Happy Thanksgiving.
Happy Thanksgiving, Tom. Good to be here.
Hey, man, I'm telling you, first off, it's great. Tommy and I are with you.
Sal,
okay?
what's happening? Great to talk to you.
Tommy, great to talk to you.
You too.
Now, check this out. This is pretty intense, folks. We have the dollar up 550 ticks, and the commodities aren't getting killed. How about that, huh?
Well, I think commodities have been so oversold. It's unbelievable. And in particular, our expertise is in the grains.
Yes.
And it's interesting to talk about that on Thanksgiving. I just looked up a few facts quickly before the show.
Yeah.
And, Americans, according to CNN, they ate 46 million turkeys last Thanksgiving.
We're going to eat
Thanksgiving Day alone.
We're eating 2 of them at our house.
There's something out there called the National... Yeah, well, there you go. And 3/4 of a turkey's food is basically soybeans and corn. That's what that is. That's the National Turkey Federation. Believe it or not, there's something out there called the National Turkey Federation, and they claim that 3/4 of a turkey's food is soybeans and corn.
Yeah.
If you look up on Penn State, I think has a chart for turkey growers, and depending on the size you grow your bird to, your bird's going to eat between 40 and 100 pounds of food. So if you convert that to bushels, I think every bird on every table out there is going to eat a bushel or so of corn and soybeans. It adds up. But think about everything you eat, from the wheat in the pie crust, the corn in the bird, the actual corn in your whatever kind of corn pudding or thing that's your tradition in your family.
Sure.
It's all grain. So people are not going to stop eating. And so it doesn't matter what the dollar does. It doesn't matter what the stock market does. It doesn't matter what the headline news is. People are still eating grains. And what's so intriguing, Sal, is that you had brought up seasonally, and
as the soybeans, the corn, the wheat have been down and been basing out for quite a while. It's amazing to me, because if in fact the dollar just continues to go higher, I always kind of look at these and say, well, food's not going to go to zero. You know what I mean? It's like, but today, what happens inside the commodity markets today, folks. So check this out. You have corn is up 0.6%, soybeans is up 0.4, wheat is up 0.3. I'm looking at this and say, man, that's pretty cool, meaning when you're looking at that divergence between how strong the dollar is and say, okay, foodstuffs, guess what? We're going to start paying more money for food or we're not going to have any food, right?
That's right. I think it affects people around the globe more. The price of the dollar makes, obviously, our exports less competitive.
Okay.
So domestically, we've seen a bear market for two reasons. One, we have plenty of supply of these grains, and two, we do have a stronger dollar. That said, the points of origin like the Black Sea, where wheat is most competitive right now on a global market, they run out of wheat. I mean, at some point, they're done selling their stores of wheat. People will have to turn to South America, which they're doing now. It's very competitive for soybeans out of South America right now.
Yeah.
And then you come to America, which is, it truly is the world's breadbasket. So you will see at some point a disconnect between the dollar and agricultural commodities just because you have to get them from somewhere, no matter what they cost or what currency you're using.
Yeah. It was neat, Sal. We were out eating 2 nights ago, and the server was from Chicago. And I says, oh, man, you're from the cattle capital of the world, And he's looking at me, well, what do you mean? I says, well, you know how Chicago got there, right? Meaning that you had all the farmers bringing in all the supplies into Chicago and all the meat in Chicago. And he's saying, really? And I says, oh, my God, it's amazing that, sometimes when you break this down, just how important. And I just think back in the history books, like I remember when they first saying the breadbasket, I remember those pictures as far as you could see were fields. You know what I mean?
It's true.
Yeah.
It's true. And you mentioned the seasonal earlier. The delivery point generally for every contract is Chicago. The rails go there. Basis trading is based upon futures prices, which generally have a Chicago delivery point for many of these grains. It gets more complicated than that. But to keep it understandable, that what you just said goes. It goes perfectly. But I think it's very important to note the seasonals here. In fact, in one of the industry newsletters this morning pointed out that the voice from the tomb says that Friday is the day to buy wheat.
Really?
For people not familiar with that, you can go to their website. I'm not a subscriber, but it's a really good service where it does the seasonals. So there are certain times, because of weather, because of the cosmos and the fact that we live on planet Earth, because of growing seasons.
Sure.
That's why grains are so cyclical. The fourth quarter, as we've said, is a very seasonal, cyclical low point generally for especially corn and soybeans. And of course, December, which is right around the corner here, it's put more lows in for the price of corn than any other calendar month in the last 26 years.
And it's pretty cool, that folks can trade these now as ETF structures.
That's right. We brought these ETFs out because, about a large portion of the world, probably 99% of investors, either can't trade futures or are not permitted to trade futures. We think made it easy. These are unleveraged, long-only funds. They trade on the New York Stock Exchange. The ticker's as easy as can be. Type corn in, and up the fund comes. And so I think people have ags underestimated in their portfolios. Jim Rogers gave an interview within the past several weeks where he said he believes people should have 10% of their portfolio in agricultural commodities.
Sure. I mean, we eat them.
It's a great diversification, without a doubt.
Yeah, and people know about gold as a diversifier. They know about oil and its importance in the economy and as a diversifier. I think most people don't realize that grains, in particular, corn, soybeans, wheat, and of course sugar, which isn't a grain, but it's an agricultural commodity widely consumed. Those four things are less correlated to stocks over long periods of time than gold, and far less correlated to stocks over long periods of time than energy. And it's interesting. People will include energy in a portfolio and buy energy when the price cycles down, knowing it's going to go up because the demand is there. Well, guess what? Grains are there too, and the demand for grains won't stop. In fact, I I would submit that people would rather be cold than hungry. And so, they're going to use grains no matter what.
Yeah,
Either along with or even before their energy needs.
That's a fact. And we know there's more people each and every day, man. Unbelievable.
It's true.
Well, listen, man, I can't, we all can't wait for Thanksgiving, and we're going to be eating those birds. And
We're going to do our part.
We're going to do our part, man.
As will I. I wish you guys a happy Thanksgiving.
You also.
too, Sal.
Have a great one. Have a safe one. Look forward to speaking to you again, Sal.
Be well.
Okay,
Take care.
man. Have a great one. It's amazing that how just our country got established. You get Chicago, you get the wheat basket,
Yeah.
you get everything coming into Chicago. Chicago's a monster.
Points of hub, right?
Yeah,
I mean,
points of hub.
especially, we're talking about Amazon delivery. Delivery is the fastest way to get things out.
Yeah.
At that point, they need those
And
hubs.
that's where you go to the Dow Industrials, because at the beginning was those and how to get them there.
Right, everything.
Stay right there, folks. Tommy and I come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 37. Nasdaq's up 16. S&P's are up 5. Let's go to Carlos in Garden Grove, California. Carlos, what's happening, brother?
Good morning, Tom. Good morning, Tommy.
Morning, Carlos.
Thanks for taking my call.
Absolutely, man. You know,
Tom. Yes.
I just, every time I see that Garden Grove, now, so that's Orange County, right?
Yes, Orange County, exactly.
Yeah, no, I remember that place
In
well.
Anaheim.
Exactly. No, I remember that place well. With the signs on
Your
the
old
expressway.
stomping grounds.
That was my stomping grounds for a couple years. Yeah, totally.
Yeah. Tom, I have a question related to XLF. And my question is, when I look XLF in the monthly, honestly, I have a hard time understanding how banks can do better when interest rates may go up. When we have very strong drop in 2008, 9,
Yes.
and where all the volume was. And since that bottom was done in the monthly at $5.88,
Right.
we just keep going with lower and lower volume. Can you explain to me that?
So if we take a look at the XLF, in 2007 it was $38. It goes down to $5, as Carlos just said. It's having a hard time breaking this $24.70 area. That's, and I believe that's probably just technically that's just a 50% retracement. I think. Let me see. Let's see.
It's 0.618.
Yeah, it's a 0.618. So that's a strong move topside. You know, it looks like the XLF still wants to back down. So there's two different parts, I think, to your question. So watch how banks should be able to make money hand over fist. Well, they already have made money hand over fist, but they'll make so much more money if the rates go up. So this is the total disconnect, but this is what you really want to understand about how the Federal Reserve is made for the banks. Is that, so you have the printing mechanism of the Treasury, but it's the Federal Reserve that basically regulates the banks, okay? And what is the ratios? Meaning, if you have if a bank has $1,000 in it, the ratio is that the bank can lend out $10,000, okay? So what the regulations are.
It's a reserve ratio.
Yeah. So
that means, I'm sorry.
So what happens is this, is that right now there is so much cash in the United States in banks that is not getting interest at all. Non-interest bearing accounts, right? But this is amazing that the banks, the Federal Reserve put this in place when the downdraft was in place, that even though the Federal Reserve pays interest to the banks on their reserve calculations. So let's picture that we own a bank. You're paying people nothing, and you're paying corporations nothing, and then the overnight rate that you're sending even into the Fed, they're paying you. It's only probably it's between 0.001 and 0.0025. That's because that's what the rate is now. That's our short-term rate we're dealing with. So they get paid for doing nothing, for just holding the cash.
That's from 0 to a quarter point, right?
That's correct. Yes.
0.00,
Yeah.
I get lost.
Zero to a quarter point. Okay. So what ends up happening is that the short-term rate goes from 0.25 to 0.50. Oh my God! There's so much money in banks right now, not getting any interest. The banks get all that money immediately, every single night. So that argument's made. That's why people were looking to buy banks a couple months ago. But right now, the whole banking structure is stalling. So it's still looking that, you know, I mean, if you look at Goldman Sachs, it can't move. It's down off its highs. So when you look at the banks, it's like, hold it, man. The Fed looks like it's still not going to go up on rates.
Exactly.
That's a fundamental basis. The technical basis is, you know, Goldman looks like it wants to go lower. The XLF looks like it wants to go lower. If we go take a look at J.P. Morgan, you know, that's a monster. That's near its highs, but, you know.
Tom, and does the velocity of cash that you have talked in the past will affect in this at this time the banks? Because see, I can see here in California.
Yes.
Most of the people who are buying properties,
right,
over 500 to 600,000.
Yes.
They're taking again loans that are not fixed. Most of them with very little down payment.
Yes.
And yeah, they're selling houses, but seems like we're going back pretty close to what happened last time.
So I agree with what you're saying. I think we got to, you know, in California, maybe it's hitting a peak because it's so expensive. What I've seen, and, you know, depending on how long you've been listening to TFNN, not you, Carlos, because I know just in general, I've seen 3 real estate crashes. And even in this last one, you always think it's never going to come back. And it's so weird, man. The way our system is set up is that the system is set up that when things are bad, the banks don't lend at all. Then things loosen up, and then there's always kind of the same type of deal. First, no one does anything. Then the banks loosen up, then everyone starts buying, and the acceleration starts going up. Then there's always the loosening that is beyond belief. Okay, the first in the 1980s, it was a savings and loans. They gave out money everywhere. And when they gave out the money, then everyone went BK. The past one was pushing out paper. The banker, the broker dealers, the bankers, they took the paper, they pushed out the paper. It's pension funds. I believe what this one's going to be, folks, and it's happening now, is it's the peer-to-peer lending. There's so many lending sites that you can get as much money as you want right now, but you're paying up for it. You're paying up 13, 14% for these sites, okay? Blackstone's behind a couple of the big sites. There's going to be big money behind them. I think we're only at the beginning of that. I don't think that will blow up for probably another 5-6 years or so.
BlackRock, Blackstone? I get confused myself.
I do too, but I believe Blackstone is the one. No, it's Blackstone. Okay. See, Blackstone is the real estate portion of it. BlackRock is the ETF. But you want to hear something crazy? Is that Blackstone and BlackRock, okay? Those two guys were partners when they were 22 or 23 years old, and they broke off. And they ended up with the biggest companies in the world. Isn't that wild?
Yeah.
So anyway, Carlos, yeah, I think it's depending where you are. I think, I don't even understand when I watch, I love watching these real estate shows, right? And it blows my mind, when it's in California or even in Boston, that everyone's paying $600,000, $700,000, $800,000 for like a single family, and the spreads are so close. You know what I mean? You just make one mistake, and bang, you're down 100,000. Because they're only trying to make 40, 50 grand on a flip of 700 grand. It's like, oh my God, man, you can't make any mistakes. So,
Tom, this question is for your son, and it's even though you have mentioned in the past that we live in one world economy, and I want to ask him if he believes that our financial system is strong enough now than it was before, and it will be able to hold in case we have the banking system of Europe in a situation that we had before. And I want to listen that on the radio. I want to say thank you and have a nice day.
All right, Carlos.
All right.
Good to talk to you, man.
Thank you, Carlos. Have a great Thanksgiving, man.
So it's an interesting question. We talk about the variables, and we were just kind of talking about them with the dollar deal.
Yes.
Because of how things go on. And I think that was kind of what I thought about when Carlos asked that in terms of what's going on. And we looked at those revenues, and that's the best way to tie things in, I think.
Yes.
That it is a world economy. It is. I mean, you talk about, and there's always going to be, you see it in the political fray right now, there's big context in terms of jobs overseas, trade deals, and that's something to be aware of completely, because you're dealing with currency fluctuations, which is battling in terms of countries having the ability for their trade, which drives economies, and you see how it matters, in terms of it matters in the jobs, it matters when all of our jobs go overseas, it matters, but then we have service economies as well, and we have financial economies, so I think we'll be fine, of course, so but it is a world economy.
The second part of his question, I believe what he was asking is that would banks go bankrupt and would it be a financial crisis?
I don't know. I don't. Because that's a different question.
But I think he's asking you as a 35-year-old.
Yeah, no, I hear you.
What do you feel about that?
Well, you're FDIC insured, and I protect myself, in terms of that's how I look at that. I mean, it is, in terms of I would be aware of it for sure. It's not out of the realm. I don't see it out of the realm. In terms, how far are we removed from very bad things happening in the banking sector, And so when you talk about not for a forever deal, but I'm only 35, and there's a lot of time left in my life, and from that standpoint, I would never say that we'll be fine. And I
think one of the parts that you just said, and this is really important, folks, to understand, what he had said specifically was the FDIC part of it, all right? So what happens is this, is that make sure that you are protected, because what I really dug, you get the conspiracists out there that saying, oh, it's going to fall apart. Guess what? it's great what they did in 2007 to come in and protect people's money. Okay,
Yeah,
because that's
you mean raising the FDIC insurance even?
yeah,
Or,
exactly, because that's
sure.
absolutely crucial. Okay,
Yeah.
so just don't put your money anywhere. Make sure that it is protected, because the government will come in
And you don't want to have millions in
Right.
any bank, because then you're relying on that bank. When why don't you just rely on the U.S. government? I would choose the U.S. government over any bank.
And so,
for sure.
so watch this. Now, this is cool. You just brought that up. That's why we have negative rates, because what happens on a structure like our fund, right? Well, what happens is that when you get $1 million, whatever that is, none of that is insured, folks.
Right.
Okay, so what ends up happening?
You want to pay for safety, right?
You have to put it. That's why the 10 years, the 2 years. You pay to make sure you get your money back, and that's where that fund...
Preservation of capital,
It's
especially in
huge.
times like that.
It's absolutely huge.
Definitely. Great question, though.
Absolutely. You stay right there, folks. Our man, Mr. Basil Chapman, is going to be coming up next. We got Steve coming up at 1 o'clock. I'm going to be back from 4 to 6. I'm doing a full 2 hours, folks. We got Chris Gaffney coming on at 4:30. Have a great Thanksgiving.
Have a great Thanksgiving, everybody. Be safe. Enjoy. Thanks, man.
Love you. Okay. Have a great one, folks. Stay right there. Our man, Basil Chapman's coming right up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.